How you doing? Today is Thursday, October the 31st. Happy Halloween, 2024. I just wanted to make this video here in regards to this article that I saw. And I just want to kind of go through the 9 reasons why real estate notes work in any economy. Uh, if you've been following me or been on my YouTube channel or follow me on Instagram, you can follow me at Abundant Capital Group on YouTube as well as Instagram. And if you've been following me, you know that I talk a lot about real estate notes, creating notes, buying and selling of notes, talking about what's going on in the real estate market. Um, I do that pretty much every day. So I just wanted to make this video here on why real estate notes work in any market. A lot of times, people are looking for things to invest in when the market is good and when the market is bad. If you're investing in real estate, maybe because of the market, you may want to pivot or take advantage of some of the things that are going on in the current market. If you're in other types of investments and maybe you've made some money thinking about diversifying, real estate notes work in any market. So just want to run through these. I'm going to read what it says here and just, kind of give my own opinion, add a little bit to it. But I think that everybody now, especially if you're interested in real estate, if you have some type of retirement account, if you've made some good gains in the bull market of stocks, um, I would think about, diversifying, looking into some other opportunities out here. And one of them that we really like and we try to get people to know more about is real estate notes. And what that is basically when an owner has a property, they will finance the buyer and they create a note and then they create a security agreement to go along with that note to protect their investment. And you have the ability to buy and sell those in any type of economy. So, the first reason we want to talk about here is this is secured by collateral. And when we talk about doing a note and a security agreement, the security agreement is the person that's living in the property is pledging the property to that note holder if they cannot pay. So it says notes are backed by a tangible asset. Unlike some investments, cryptocurrency comes to mind. At the end of the day, there is a property that is used as collateral. So you can always get that back to protect your investment. Not, too many things you can actually get a tangible asset back if someone defaults or doesn't, pay as expected on an investment that you have. And so that is, why one of the reasons why, this works in any economy. So if things get bad, and somebody goes through a hardship, you can always get that property back and then look at multiple strategies to make sure that your investment is getting the type of return it's looking for or to recoup the money that you have in the investment. Um, Risk mitigation is number two. I don't know a better investment for managing risks all while earning a good return. At the end of the day, the individual investor decides how much risk to take. When you're looking at any type of investment, you always want to evaluate the risk. But with real estate notes, you can figure out, I have X amount of dollars. I want to get X amount of return on that money for a certain amount of time. And you can find specifically those parameters, and you can do it with lower amounts of money. You don't need maybe 30, 40, 50,000, $100,000 to make some of these investments to get the type of returns that you're looking for. So it says here, for example, I prefer not to be in a property greater than 70% of its value. That means that if the property is worth 190,000, the most I would want to invest in the note is 133,000. And so you can do that, that investment to value ratio, whatever it may be. Maybe you're somebody that wants to be a little bit more cautious. You don't want to be in an investment more than 50%. You can find that, especially these days where, the prices of home have gone up considerably over the last 4 to 5 years. A lot of people have built in equity. You can buy a note at a discount and be in a property at 50% of value and still get a solid 7, 8, 9% return or even higher in some instances. So you have the ability to, manage your risk and get a solid return on a lot of different amounts of money and a wide range of money. Flexible investment options, just like how I decide the level of investment I want to be in on a deal. The deal type you can choose as well. There are single family homes that you can buy notes on. You can buy notes on raw land. Right now, obviously, in the country, there is a shortage of homes being built. And maybe your focus over the next, 2 to 4 years or something like that may be to acquire land. And then, people are going to be looking for those types of properties to potentially build on. So that may be a strategy that you want to, look at for the near future. You can look at buying notes on commercial property or multifamily property. So again, kind of piggybacks the last one that we talked about on which tailoring it to what you want. But, in terms of property type, you can do that as well. Predictable returns. Again, once you buy a note, and when you do buy notes, in case you don't know, you typically buy them at a certain level of discount. How much discount? Again, it's going to be up to you and that person that sells the note. But you can get a predictable return because that payment that the person is making now that you have purchased this note is going to remain the same. It doesn't change, for the next 360 months, 240 months, 180 months, whatever it is that's left on it, that particular amount is due. And so that on a yearly basis, you're going to get X amount of return. So that predictable return, is another reason why this works in any market. Now, even, again, if things go bad, we always want to deal with the worst case scenario. If things go bad and you have to get the property back, you can figure out what's the best way to manage this particular asset where I can still get my 12% or maybe even more return on the money. Maybe you get the property back and you just sell it. And then now your 12% return maybe goes to 20% because you're taking in a lump sum of cash after collecting a certain amount of payments. Maybe you look at it once you get it back, maybe you don't want to necessarily write another note on it and use it as a rental. Then you can kind of figure out the numbers on that. Like, what do I have to rent this at minus my expenses for me to maintain, a 12% return on this particular investment. So, those predictable returns can happen, no matter what happens in the market. Portfolio liquidity. We have an entire the first how I can create better notes to hold on to for interested income. Second, how can I create better notes to sell at a later date? The portfolio, the liquidity aspect of this is very key as well. Again, if the market changes, you can always sell your note for cash. You can sell partial of the note. Maybe you want to sell the next 5 years or the next 7 years or the next 10 years, just depending on how long the note has remaining, but it is liquid. So you can, be able to, in a down market or some other type of market, be able to, sell this note and get, liquidity right now. Maybe there's another investment you want to go look into. You can go to, if you purchase one or two notes, maybe you can cash those in for X amount of dollars and then be able to go and take advantage of another opportunity. You may not be in a position to sell a property because the market is not doing well. Maybe they took a dip in terms of the value of the property. Equity is not there, and you can't just go sell it or refinance it to get that money right now. That can hold you back from taking advantage of another opportunity. But with notes, you are, it is liquid, so you can sell it, at any particular time. As I kind of mentioned earlier, lower capital requirements. With notes, you don't have to jump into the deep end with big dollar amounts. People that have small balance IRAs, I would highly suggest that you look at, doing a note. Um, if you have maybe something between $1,000 to $10,000 in an IRA, maybe you and a friend, maybe you and a couple of people can put together your IRAs and purchase a note. And then this way, everybody is getting a solid return. We can split it up into thirds or quarters, however it may be, but whatever that payment is, a certain portion will go to each person. So maybe, like maybe you set something up for your kids. Maybe they have low balance IRAs. You can partner with your children's IRAs, buy yourself a note, a certain amount is going to go to you, and then, the balance of it can go to either one or more children into their IRA. So don't think like again that you have to have 50, $60,000, $100,000 to invest in notes. I mean, obviously, if you do that, you can do that. And you can buy multiple notes that way. But if you on the lower side, you just, have a IRA that's or some type of a retirement account or savings account that, has had a smaller amount of money. There's ways that you can partner up with others or use that small balance amount to invest in notes, because notes are all across the country. You have a lot of different areas that are in the lower price band. In the south of the country, you have, properties that are under $125,000, under $100,000, in different parts of the country. You'll be surprised on the type of homes that you can get, what the prices are, but you can definitely get into this industry with lower capital requirements. Less management hassle. With a note, you're not responsible for the property itself. Anyone who has owned real estate and had tenants know the hassle of a 2 a.m. phone call because a toilet is making a funny sound or a sink is having problems. You don't have that type of situation. Just think about you. If you ever owned a home or know somebody that owned a home, if something went wrong, they don't call the company that gave them the loan to buy the house. They have to deal with it themselves. They call, a plumber, electrician, HVAC, roof person to come and fix whatever issue is in the particular property. So as a note holder, you have less hassle, and that's another reason why you can invest nationwide too, because you don't have to. You're not going to go and drive to the property because if something goes wrong. It's not your responsibility. The only time that you really have to get involved is if the person stops paying, and then you have to get the property back. And then at that particular time, we can have, certain people in the area do certain things if you don't live in that particular area. But the overall point is less management hassle. You don't have to hire a, what is it, property manager or something like that. You don't need that when you do notes. Trading power of real estate notes. Just like you can sell the note for liquidity, you can also trade the note. Maybe there's something you want to purchase, a debt or something like that that you want to pay off. A lot of times you can either pledge your note or trade your note. Somebody else may have a property too that you may be interested in, and they own the note on it. Maybe you guys can swap out the notes that you do have, so you're able to trade these as well. And again, another reason why in any particular market, if any type of scenario arises, you can always look to trade your note. It says, I suppose this could have gone in the liquidity category, but it's a bit different. Yes, you could always look at selling your note, most likely at a slight discount, but you might have the option to trade the note. The advantage of trading is that you can typically trade at the face value of the note. Again, if this note is written at 10%, 9%, 11%, usually in between those ranges is what notes sell for. You can, then trade it, and that person is now going to get somewhere between a 9 or 11% return, or maybe even more, just depending on the situation. So trading a note is very powerful. And the last one here says notes stand the test of time. Let's face it, the economy will go up and down. Private mortgages and notes backed by real estate have been around for a long time. They've survived those ebbs and flows. Wealth is achieved by slowly growing your portfolio, not overnight, and not trying to time the market just right. the no strategy is proven. Um, that, everybody's, unless something catastrophic happens in the world or in this particular country, someone is, they're always going to need a place to live. And most people, would rather own a home than rent a home. And, that's why notes have always stood the test of time, because people are going to want to live somewhere. And as a note holder, you can, provide them that opportunity, by creating a note and allowing someone to become a homeowner. So, um, I just wanted to kind of go through those 9 reasons on, how a real estate note is good for, any economy. If you see this and you have any questions, have any comments, yeah, you want me to maybe go in detail a little bit more about something, you can reach out to me at 973-475-8488, or you can email me at investorgmr@yahoo.com. But again, I would definitely, look into notes. A lot of things that are going on in the real estate market, um, credit availability, the right, interest rates of what they are, the prices of homes. If you're a landlord and you like the cash flow, but you don't want to deal, like we talked about, that management piece of a property, real estate notes can, can solve that particular issue for you. If you have a property, maybe it doesn't have a ton of equity in it, you can create a note on it where it can, over time, you can get the equity out of it that you're looking for. So there's a lot of things that can be done depending on the situation that you're in or what you're trying to accomplish when it comes to seller financing and creating notes. So people should look into it. And I think, where we're at right now and, what the market looks like in the near future over the next, I would say, 24 to 36 months, there's going to be a good amount of inventory out there of notes that are already created. And then there's going to be a good opportunity to create notes for yourself. So, again, reach out to me if you have any questions, and we'll talk to you soon. Have a great day.